Francisco, help us understand what's really happening with Iran and the U.S.
Well, look, I think the administration has been very clear about the objectives here. They didn't like the JCPOA to begin with. They want a different deal. And Iran feels like they have been holding their end of the bargain. So clearly you have two very different views of the world coming together in a meaningful clash. So that's really the story. And I think, I don't think it's easily resolvable because clearly Iran doesn't want to sit down and renegotiate the deal, and the U.S. wants to redo the deal. So I don't know how we unlock this situation.
Do the markets right now in oil price in the assumption we're going to have these sanctions going out into the future? Because, of course, they came on and there were waivers, went back and forth. What is the market assuming right now about U.S. sanctions?
Well, I think the market's assuming that they're going to stay through the end of Trump's first term. And if he gets a second term, maybe another 4 years. My guess is the Iranians are waiting for Trump to be ousted into the next election, and then maybe they get back into the JCPOA, which is the reason why they haven't actually breached any of the limits established in the treaty. So that's my sense. I think strategic patience has been the game, but obviously they've also upped their tensions by utilizing proxies for certain attacks against Emirates and Saudi infrastructure. So it is a very difficult situation to resolve. There is an impression in Tehran there is a regime change push on the U.S. side, which the government has said no, but there's both sides of the argument here. So.
The result, though, in the oil market has been truly staggering. Right. If you come inside the Bloomberg here, this is WTI, and on the cusp of a bear market for the whole year. A really crazy couple weeks. A couple potential other reasons for that, right? You have Saudi Arabia able to pump more to make up for Iran. You have Chinese refining margins are kind of falling off a cliff. How do you explain the bearishness?
Well, first of all, I think you have to go back and look at disruptions and. We are experiencing probably the largest level of disruptions since the early 90s, since the first U.S.-Iraq war. So we've not had this kind of disruption in 30 years, right? So including Venezuela, Iran, and what have you. On the other hand, we have a kind of a demand picture that is kind of falling apart, and it's falling apart because we just can't seem to agree on trade, which is the other side of the equation here. We are entering the third industrial downturn in the last 10 years. Because, yes, we've had an expansion for 10 years, but we've had 3 industrial downturns in 2012, in 2016, and now in mid-2019. And I think that's ultimately what's pushing the oil market lower. It's the weakness there. And then, frankly, some of the issues that could happen from trade. Let's say that China decides that they don't want to pursue a trade deal with the U.S. and instead they're going to start buying Iranian oil and ignoring U.S. sanctions on Iran, then that's a pretty bearish outcome for the oil market, I'll tell you that. So
Lori, what does this mean for the energy market?
So we actually just downgraded the energy sector last week, and we actually did it, we said, with a heavy heart at the time, because there's a lot of stuff we like about this sector. Great buyback profile, dividend profile, very shareholder friendly, very disciplined, but we just can't step in front of these demand concerns. And I don't think investors give the energy sector enough credit when oil goes up, but they certainly beat it to death when oil goes down. I think that's what you're seeing right now.
So, Francisco, that's sort of the demand picture, and you can see how that's being reflected. But then we have supply from the U.S. sort of continuing to grind higher. We're going to get some more pipelines coming on in the back half of the year, so you're going to get even more oil out of the U.S. Has the market started to factor that part of the scenario in yet?
In part, yes, but also remember we are losing a lot of Iranian barrels at the moment, right? So we do have a huge gap on the supply side, and again, what's been difficult here is that supply has been falling very quickly, but then again, so has demand. And we've been working with the assumption there was going to be a U.S.-China trade deal. That was kind of our house view. And now obviously with the last 3 weeks, things have changed a little bit, and it doesn't look like we're going to get a trade deal immediately. The news over the last couple of days on Mexico, I think, make it even less likely with a China deal, because China's going to think, well, hold on a second, do I want to get a trade deal done and then just, after I'm done, then get extra tariffs for some other issue that's unrelated to trade? So I think that's kind of why the markets are selling off generally, where you're seeing oil, all cyclicals, also industrial metals have had a pretty terrible move down. And again, rather than being, because we're at the inflection point cyclically, right? if we keep on going down, we're going to drag down our services industry as well, not just the manufacturing sector. And that's, I think, the main concern of the markets. While as if we were to get a trade deal, kind of get all these issues smoothed out, we could see a cyclical inflection point, in which case we don't really have a lot of supply to meet this incremental demand. So,
Lori, we're seeing some things that we haven't seen before.
Yeah.
I think it's fair to say in the trade area, tariffs, things like that. Often markets overreact when it's something new. Are there places within the energy sphere that you think people are overreacting where there actually may be some opportunities?
I would say on our industry level work, the oil and gas names look a little bit more interesting to us than the equipment and services. I think you've got a slightly better valuation profile there. The earnings expectations have held up a little bit better. But at the end of the day, what I see in my seat is when the energy sector's out of favor, pretty much everything tends to get bid down.
So do you need oil prices to stabilize and or go higher for you to think about your value call on energy, or what?
I think you do. I mean, I think at the end of the day, investors have gotten very rattled by the declines they've seen in the commodity price. And so it does cause them to question whether some of that shareholder friendliness can continue down the road. I think we also just frankly need to see the geopolitical backdrop stabilize in here. Energy is a very macro-oriented sector. It's an easy one for people to trade when macro concerns flare up. And what's been surprising as we've looked through some of these trade war issues that have popped up over the last few weeks is energy keeps popping up as being at risk. So our analysts were very vocal very early on that the demand picture will be adversely impacted by the situation in China. And we were actually surprised too when we did some screens last week on Mexico, saying energy is one of the sectors that chatters about Mexico the most. But it's very easy for investors to just pull the trigger here and send the stocks down.
Francisco, if this uncertainty continues, what changes might there be in supply relationships? I mean, you mentioned, for example, China perhaps buying oil from Iran. I mean, we talk a lot about supply chains with respect to China and manufacturing, but where are there other places around the world where people say, you know what, I got to find another way to get my oil. This is not working for me.
well, I mean, I think if you believe the trade war is not just about trade and what's going on in the 5G space with Huawei is going to end up resulting in almost two different blocks
and
building
Mexico
up.
tariffs.
Right?
I mean, we have some evidence it's not just about trade.
Right, exactly. Well, but I think there's the issue of, is this spaghetti on the wall kind of tariff approach, or is this more targeted tariff approach on China and potentially China's allies? Because if we have that kind of circling around China, then you're going to have what you're talking about, which is basically also sources of supply starting to split apart, right? I mean, Iran and China kind of moving one way, and kind of U.S. and its allies moving the other way, right? So, but I mean, ultimately, I don't see that event coming out. I mean, I think it's more specific to the 5G sector, but it is a risk that we end up having a split world, right? I mean, that's what we are saying here.
So what do you do? And if you look inside the Bloomberg here, this is WTI and Brent, and so the time spreads 1 to 3 months. Yeah.
You know, I put my gold tie just.
Was this a signal?
To be clear on that.
That's a statement there. Yeah.
It's my statement. I thought I would have to say it, but
Gold.
No, is it gold? I mean, because it's easy to want to buy oil if you're super backwardated. Like it would have been easy to buy Brent when the spread kept going up.
I mean, listen. I think if the world economy turns around and the cycles picks up from here, we're going to have a big run in oil prices. Because remember, end of the year, we also have IMO 2020, which is going to lead to incremental consumption for oil. So it's an easy buy if all these trade tensions are relaxed and we see a cohesive policy from the White House saying, okay, you know, we've sealed all these deals and now we're moving forward. And honestly, like I think we're going to need that for the economy to do well in 2020. Like we can't just keep going down this path where we're taking down global manufacturing and global services. It's not going to turn out well for the U.S. economy either, unless these issues get resolved in the next 3 months, I think.